Welcome to this morning's discussion on competition in open finance. I'm Paul Loberman and I'll be moderating today's session. I've spent my career working for some of the largest banks across the globe like Santander and HSBC, leading teams in digital transformation, innovation and product management. But a little bit about myself is recently I've stepped into the world of fintech and in startups, or possibly really more specifically tax tech, as Chief Product Officer at Untitled. Untitled are the UK's personal tax app, and we're using open banking and other data sources to work end-to-end, from enabling users to link their bank accounts to making tax sense of their transactions and then submitting their filings directly to the HMRC, saving them time and accountancy costs. We're partnering with companies like Revolut, Deliveroo and Deloitte to take that worry and hassle away from about 12 million people, like freelancers and property landlords and high earners that do their personal tax returns in the UK. We've also been working with Fractal as part of a successful bid from the Banking Competition Remedies Capability and Innovation Fund to help competition and services for sole traders in this space. And we're going to be talking a lot about competition in open finance today. And with a panel of awesome people, I suspect we're going to cover a lot more in and around this topic over the next 55 minutes or so. So before we dive into the topic and I start asking some, hopefully some tough questions and we can kind of get into the meat of the discussion, why don't you take a few minutes to introduce yourselves and where you're working. George, let's start with you.
Yeah. Hi, I'm George. I am CTO and CIO of Crédito Agrícola. Okay, Crédito Agrícola, it's a cooperative bank that we mainly implemented in Portugal. Okay, and it's very interesting for us to be here in terms of fintech, if you want, competing in an open world, because in reality, being a cooperative bank is what is pushing us to try to think a bit. How can we, as several banks that work together through a market or to a client, how can we work with each other in terms of complementarity to fill in, okay, a most unite, if you want, cooperative bank, okay? So that's one of the things that open banking, mainly in terms of technology, and I'm talking mainly about API. That's what we have used and what we have been working with to trying to leverage this go-to-market experience that we can do, okay? We are also one of the first banks to digitalize a lot of new things to client, the first bank with Apple Pay in Portugal, okay, Google Pay in Portugal. We are the first bank with this. And that's very important for us to have this kind of structure, cooperative and all of this, because this is what helping us to go a little bit further and we start to think that inside to go outside. And here I am. Thank you.
Okay, thanks, George. And Chris.
Hi, Paul. So I am Chris Hyam. I'm head of open banking at Virgin Money. Virgin Money is the sixth largest bank in the UK now, after a recent 2 years ago now merger with Clydesdale Yorkshire Bank. So we, like many banks, have come to the end of the journey of implementing the requirements under PSD2. And I guess like nearly all banks retail banks in the UK, we've done that via implementing APIs. So kind of like many banks, we got to the end of that journey, realized that open banking isn't just clearly, and that's why we're here today, is the start of a change and a shift in the way that banking operates and not simply a regulatory obligation that we had to fulfill. And therefore, again, like many banks, we're in a position now where we realize open banking needs to sit as an enterprise function, not just from a compliance point of view, but from a strategic point of view, given it cuts across all of our product sets and all of our customers in terms of both the risks and the opportunities that exist there. So again, so similar to George, we're in the position now where we're starting to really think about how we can leverage all of the investment that we put into the regulatory obligations for the good of our customers, and how we can start to partner in that space and do, move beyond what we just have to do.
Okay, thanks, Chris. Numan, welcome.
Yes, welcome. Thank you very much. I'm Noaman Cherkaoui. I'm CIO at Front Finance, which is a Société Générale subsidiary group in charge of lending. And I'm especially in charge of individual loans. And in my scope, I have also the service provider of a lot of product for the French market, banks, insurance, neobanks, and fintechs, obviously. What we call now the open banking. And Front Finance is a loan operator on the place since 1990, 30 years ago. And apart that, I wrote a lot of articles on open finance, new banking, AI, and data. And we can discuss after on the operating model of Front Finance on the open banking ecosystem.
Okay, thanks, Noama. We are expecting one more person, and they're having technical difficulties connecting, which is, it's 2020 after all. So, not surprising on there. So if she's able to join, we'll introduce her at that point as well. But, just a note to everybody that's watching, you can post any comments for the panel in the chat on the main stage, on the chat tab, in the stage tab on the right-hand side of your screen, it should be. And we'll hopefully try and interact with you during or after the session. So now that we've got to know about each other, tell me a little bit about how your companies have embraced open banking so far, and what have some of the successes been that you've seen? Chris, why don't we start with you in the UK?
Yeah, so actually, I was reflecting on that this morning, Paul. There've been, I guess, a number of successes, but really, I do still feel we're at the start. So one of the huge successes that's been generally in the UK has simply been the uptake of open banking services. So, we at Virgin Money were not part of the big 9 largest providers of current accounts in the UK who are mandated to bring open banking on ahead of the regulatory deadline. So, the rubber's only really started hitting the road for us in the spring of this year, in and around when all the kind of global lockdowns happened. And certainly the uptake of open banking from our customers and the percentages of our total digitally active customer base using open banking are really surprising me at the moment. So much so that we've actually had feedback from customers when third parties have not chosen to integrate with us yet because they've prioritized other larger institutions, actually getting customer complaints saying, why are you not integrated with this accountancy package, or why are you not integrated with this credit scoring service? So from a purely macro level, and that's nothing to do with us to some extent, we've done what's needed to be done. But from my perspective, actually seeing customers clearly engaging with open banking, particularly business customers or SME customers engage with open banking, I think is obviously testament to the third-party services that are available and the value that customers are clearly seeing in the market already, which is, as I said, far exceeded what we expect. In terms of embracing open banking, it's an interesting question. And when I look at open banking use cases, it's clear to me and to the organisation that there are those use cases that have more immediate benefits, and we've seen that in the UK around payments already. We've seen some of our competitors launching the ability to pay off your credit card balances using open banking, and my focus at the moment is really on embracing those short-term beneficial use cases in an environment clearly where funding is constrained and where priority has to be given to those initiatives that can really get the real return in the short term.
Right. I think we'll talk about use cases as we go through. I hope today. Nuaman, how's your company been embracing open banking, and have you seen some success so far?
Yes, hopefully. At Société Générale side, globally, and from finance especially, we consider that since many years an open approach to grow and to develop products and new clients. Among the parts taken, open banking and open platform are definitely the business model highlighted to integrate the ecosystem of partner, both business and technology side. Recently, at group level, regional group level, we have forged a major partnership with high-profile fintechs such as Trezor and Shine, and we create also a new internal fintechs intra-partnership. At the level of From Finance, also we have acquired a marketplace called ATL and forged some partnership with local French fintechs, Algon, for example, and more recently, Monza. Not to mention the banking players who distribute our product and their white label thanks to API. Then we have integrated all the ecosystem in France in order to be sure that all these partners can distribute all our products due to some choice product or a scoring or another thing about the value chain of the From Finance that we have got in the last years.
Right. I've seen a lot of activity from Société Générale in that space, and I particularly was interested in that Trezor partnership or the acquisition, I think, of offering that as a service. So let's explore that a little bit more later. Georges, in Portugal, how's open banking going?
Well, we see open banking. We, as a whole in Portugal, see open banking much like a compliance thing. Okay, so we have to be compliant. Okay, so we have a centralized operation for payments, which is SIBS. They have put in place within the system of payments, okay, that's they are managed in a sole provider, okay, which is owned by the banks, okay. They have put it, if you want, a PSD2 API framework, okay, that equals all the banks through to third parties, okay. So the exposure of PSD2, okay, is the same. So if you want to talk with one bank and want to talk to the other, you have the same framework, the same XML schema, okay, and it's the same, no matter what bank is. So it's a very centralized, if you want, a very centralized PSD2, and reflects a bit of the compliance way, okay. But there are several banks, as us, okay, that are using their API infrastructure, okay, and we are using this PSD2 compliant not through our API framework. We are using via other protocols, okay, but we have put in place, and other banks also, some APIs, some open APIs, if you want, management, okay, that some of us are using for other things, okay. First of all, for us, for example, we are using it very internally. What we are doing, we are platformizing our core, okay, and with our CRM and all of this, and we are putting, if you want, a layer API based, so that anyone can talk with our system of records or whatever, okay. So, and we are doing this here with our providers for us, okay. So when we will implement a new front end for branches or a new mobile application, ours, okay, we will do it through APIs that we expose to providers that work with us, even with our own team, okay, but they have to work through API products and API framework, okay. That's one of one of the things that we're doing. And then we open up, let's say, a new branch of innovation, and we have put that in the hands of digital marketeers, okay, with some programmers, and they came up with an application for millennials and Z Gen, okay, which is called Moe, okay, and it's buzzing in Portugal, okay. So it's and it began with this API approach, okay. So what we have is we have an APIs, we have policies, okay, and we give this, okay, through a portal to a bunch of guys, okay, that the bank contracts, okay, the bank does their contract with them, and they produce okay, let's put it like this, a prototype, whatever, okay, and they are doing in 3 or 4 areas things, tiny things, okay, but the market is appreciating that kind of approach, okay. So this, we always see this, we also see this as an extended IT capability, if you want, okay, because this helps us a lot in terms of policies and in terms of extending our capacity. So that's the, if you want, the technical side of this, of open banking, if you want, okay. In terms of product, as I told you, okay, one of the things that we are doing, apart from the compliance, is regarding SMEs, okay. So we have opened up a bunch of 3 or 4 APIs around statements, payments, and 1 or 2 things, okay, that goes through directly to the SME ERP, okay, either SAP or whatever ERP they have, okay, and they are using this, okay, and also we are also giving also statements and all of this to retail SME for the payment system, for them to do consolidation, okay, for treasury management, okay, for money management. But we are mainly going to SME, okay. I think that's the ones that are, let's put like this, they are the first ones that like this approach of open banking, if you want, okay. That's our experience.
Okay. All right, great. You mentioned there at the beginning around compliance as a function. Chris, I think in the UK found that we've been very regulatory driven, as the implementation of open banking has accelerated in the UK. And a lot of other countries are looking to us for, how we've done it, how we've benefited customers through the technology, and particularly around, what lessons we've learned. So what insight can you provide to George and Norman and others, listening, that we should take forward to make it easier to be more competitive in the next stage of open banking when we move to open finance and open data and open everything?
That's a good question, and actually it sounds to some extent from what George was saying that similar things happened in Portugal. I think in the UK, one of the things that's accelerated the uptake of open banking over and above the kind of regulatory aspect has been the implementation entity that was created. So that entity, rather than just taking a role in terms of producing API specs and agreeing those with everybody, has really taken forward a collaboration role across the whole of the industry. So it's been hugely valuable for us bringing together during the development phase and during the execution phase all of the banks, so the ASPSPs, and all of the third-party communities, lawyers, everybody else who's interested in the ecosystem, to collaborate both on the regulatory aspects of it, but also everything that sits around it, from aspects such as the consumer experience, so making sure that that's consistent across the banks when we do our authorization and consents, through to actually thinking about further use cases. So in the UK at the moment, we're consulting on extending payments to a long-lived consent that will allow payments to be initiated without the customer being there. And actually having that central organization to be able to bring people together, to be able to kind of bring that knowledge and that thinking together has been hugely valuable and has really helped to accelerate the uptake and help to iron out the creases as well, particularly for smaller organizations and smaller banks like us, where we aren't top of the list for third parties. We aren't top of the list for third parties to be able to connect to. We're not the biggest. We don't have the most mutual customers, but actually having that kind of central core has really helped with collaboration. And I think going forward, as we move into open finance, being in the position where we're able to use that central body to help to establish what open finance should look like, to help to kind of bring together the standards and help to bring together the thinking on both sides, will be hugely valuable. And I'm really hopeful that that's where it lands. Now, there's a wider question which we're trying to ask ourselves in the UK about whether open finance and the opening of a further account should be regulated or not. And I think that's a really interesting one around whether it should be, we should say PSD2, that's it. The rest of it is kind of market led, and off we go through to a position where it's regulated and everything's kind of, everyone has to do the same. Now, I think one of the reasons for the success in the UK, and we've got, you know, the largest uptake of open banking, I think, in Europe, is because we had actually regulation. We all had to do it. We all complied to the same standards, and therefore we ended up in a successful position. So it feels to me that there are certain problems with the regulation as it stands. So non-payment accounts, so being able to connect an easy access account, not one that has limited withdrawals, that customers don't understand just now, and makes little sense to anyone who's not in the weeds of payment regulation, that just need resolving. And actually, I'd favour regulation to do that, taking it back through the implementation entity, and ultimately coming up with standards and agreements that make sense for customers.
Okay, that's an interesting transition that we're really going to kind of have to watch how that plays out, if it does play out on there too. It requires a lot of people to play nice together too. But I think there's definitely a sense of collaboration, you know, amongst people in the UK around this, which is, you know, also maybe increased competition. But George, you know, has regulation and the implementation of open banking in Portugal really accelerated progress and increased competition, or are you finding kind of something different from how we've experienced in the UK?
No, as I told you, the fact that we follow a compliant route, if you want, okay, that diminished a bit the competitiveness that open banking could bring. There were 2 or 3 fintechs, Portuguese fintechs, that stated it when the framework came out, okay, that stated this, okay, so this is not very innovative for Portugal, okay, so okay, but I think it's a step-by-step kind of strategy. Okay, it's a step-by-step. Okay, let's put this first. Okay, let's see what's happening. What we see is that 2 or 3 banks have put in place an aggregator. Okay, because the framework is the same for every bank, so it's easier. Okay, it's only the authentication way which is different from each bank to each bank. Okay, but the API framework is the same. They have put in place 1 or 2 have put in place some aggregation, okay? But still the aggregation technology is still too much docent a bit, okay? It's not so still, okay? But there are 2 or 3 banks that have put in place some aggregation, and we are seeing people, mainly in the not SMEs, okay? People, clients, particular clients that are using this aggregation a bit, and they are liking this way of seeing several accounts in one screen and have this PFM, if you want, kind of thing. But still, I think the technology of not PFM, but the aggregation, if you want, it's still not very reliable, if you want. So people are using it again. Okay, let's use it. Okay, but this doesn't work. Okay, so in 6 times, I will come again and try to see if this has evolved a little bit.
Yeah.
Apart from that, I think there are a lot of initiatives. Okay, but I think it's the SME segment that's happening. 1, 2, 3, 4 banks are doing this with the SMEs. Trying to leverage a better connection, okay, with and that part, I think there's some competitiveness, but always inside the banking area. So there's not too much fintechs around this, okay. So anyone that wants to enter in our market space, if you want, okay, it has to come with a full feature app, okay, not some part of a front end that connects to the API and to the banks and gives something different to this bank than the other, so that it can calls for clients from that bank or not. So this is very centralized. I think that will give us some experience to go a little bit further, okay, and trying to, and I think that also European Commission will also try to open up a bit things, okay, but still not too much competitiveness around that, okay.
Yeah, it's interesting because I think we went through that in the UK a little bit with the aggregation apps, where you know there were some teething problems, connection problems, tagging of transaction kind of differences, you know, and it probably hurts consumer confidence a little bit in open banking. But I mean, I've probably got all of them on my phone, right? In terms of, there must be a dozen or so, you know, standalone account aggregation apps. But the one thing, you know, that obviously, you know, the more you use it, you realize that it's great for banking, maybe some savings, because, you know, not every savings account is in there. You can add some manual accounts, but, you know, it's those other products that are missing that maybe they come into the scope of open finance, and that, you know, bringing in general insurance and mortgages and loans and credit cards and more savings products. I think those are going to be able to enhance the propositions to benefit customers even more. And I think, you know, if we take lending, Numan, we've already seen some smart uses of data, right? For credit scoring. But once we get that data into an open finance world, what are financial institutions and fintechs going to really do with that data? And where are the opportunities for them to be competitive?
Yes, thank you for the question. I will come back to the aggregation side. I think that a huge market and which is superior to money and lending. But globally, customers, especially millennials, as Chris said, are more and more often multi-banked, you know. And along this trend comes a complexity to juggle the different applications for each bank. In recent years, we have therefore seen an arrival of application promising to consolidate all the accounts, the goal to view everything in one place in the same application. This is called account integration, as was said by George in Portugal. It's the same thing in France, in Spain, and Italy. These applications have been enriched with features such as budget management, expenditure categorization, or expense tracking by category. All that, this is data. These data are real treasure because they are classified and therefore considered reliable. These data well analyzed, can be used to various purposes. Let's use code, for example, to know the habits, behaviors, heritage, and therefore the overall situation of the customer, to adjust the amounts of credit due to the real capacity to the consumer, and even after a credit score, which improve the credit score and automate certain loans requests, etc. That's what some fintechs give to the market in order to help banks to develop this part. I usually used to say to my colleagues and to my partner, lending is technology and data. Data and technology are the two sides of the same pieces, and I think that this market of lending is a little bit forgotten in the open banking side, because all the banks now, we have some credit card transaction, we have some debt, but we have a lot of lendings, and we can have a great collaboration on that side. We can come on this subject after. Then this is a great asset, scoring and data. Technology and data, they are the asset of lending side for all the banking and also for the fintechs.
So it's an interesting point, where you mentioned a lot about data there. Yeah. Are we going to compete on data, or are we going to compete on user experience? And is it going to be different? Are fintechs going to compete on user experience because they can pull the data in, or are banks going to compete on data because they've got all of that already? And what do you think?
But the opening data now within the framework limited by regulators is, in my opinion, a win-win strategy, which benefits financial institutions, but as well fintechs and customers. this is a market which we can divide with the three parts. We have also regulators, because some regulators, when they put some regulators and some rules in order to allow to some fintechs to access banking data, it's not also to or only to put out competition, but only to have some new collaboration with that. And customer finally will be gained, because he can compare a lot of offers. He can choose what the great offer that he can have. You can have some credit in bank A, some mortgage in bank B, and perhaps some heritage or other thing in bank C. That is the huge benefits for this application.
Okay, all right, great. Let's kind of look a little bit more into the future. Chris, you and I were on the kickoff call last month with the open banking implementation entity in the UK, and they're pushing forward, progressive development of open banking solutions with the VRP, with variable recurring payments, if I've got that right, and sweeps initially. And I think I came away from that call with my head spinning, really positively, thinking about some really interesting propositions and use cases that those developments could enable. Can you tell us maybe a little bit more? I mean, your impression coming back from there. I know you're responding to the open call for proposal and discussion on that too. I don't know if you can go into any depth on that, but what are the kind of use cases that people could think about that this could enable?
Yeah, it's a really good. It's a really interesting area actually, and when we talk about open finance, we typically always just talk about opening up more data, right? And that's what we've been discussing so far: insurance and savings and investments and those kind of things. But actually, you're right to bring this one up, Paul, because really opening up payments further is also really interesting, and as you say, open some interesting use cases. So the idea behind variable recurring payments is that at the moment, whilst you can, under PSD2, you can grant access to your data for 90 days to a third party, as we've been talking about, aggregators who can then grab that data every night if they wish and provide you with some useful insights the following morning. At the moment, you have to be there and present to authorize a payment. And that's, I think, as I understand it, that's kind of the position across Europe. The variable recurring payments proposal is effectively to make use of the regulatory framework that we have already, but gather a consent which has got some boundaries associated with it. So for a certain amount of value, for a certain volume of payments, and the idea is that a third party can gain that consent and then initiate payments on the customer's behalf without them having to go through the bank authorization every single time. So it opens up some kind of more basic use cases, which we could all imagine now. So bill payments, the ability for third parties and utility companies or whoever it happens to be to ask if you want to pay your bill at that particular point in time, or whether you want to wait, and just be able to initiate that payment without having to go through and do an authorization. And kind of those kind of regular replacement of those regular payments with something that could be a bit more smarter and in the moment. But to my mind, it opens up all sorts of other interesting use cases. So, we've seen across in Latin America, kind of the emergence in India, I think, of WhatsApp Pay and social payments, which again, I think having the ability for those kind of payments to hook into the rails provided by open finance, open banking, creates a different economic case to linking up card rails and that kind of traditional model that we're used to, where actually it's cheaper to do that, which again then opens up all sorts of other interesting situations around micropayments. We've seen finally the example in the UK of a washing machine manufacturer who charges you per wash now. You don't pay for the machine, and that's been something that we've been talking about for years in a kind of slightly jokey fashion. But in reality, that's there now, and there's no reason why these sorts of micropayments and use cases couldn't be enabled via a variable recurring payment. But the main reason why the regulators in the UK are interested in it actually is more around competition in current accounts. So probably the more immediate consumer benefit is around the ability to make sure that customers aren't holding high balances in current accounts and that they're being swept away. To Numan's point earlier, to savings accounts that are perhaps held at another bank. And not just a savings account that you get offered at a poor rate by your primary bank, because you could do that now. I could open a current account with a big bank in the UK, click a button to open a savings account, I can set up a sweep. But that savings account's probably got a pretty poor interest rate compared to one I could get from a Best Buy table, and sweeps would allow that money to be pushed over. And I think the other really interesting one in the UK is around overdrafts. So when you're in a negative balance on your account, again, the big banks in the UK have been accused of charging too much money for that. And again, this is where it all comes together, actually, where a third party can use the data and can see that you're going to be in a negative position on your balance. At the end of the day, they can push money to you and lend you a small amount of money for a period of time to make sure that doesn't happen, so your bank doesn't charge you. And then when they can see that you've then been paid, they can then use a variable recurring payment to quickly take that money back again, so that, again, you're not paying interest on something to them that you don't need to be paying, because now you've been paid by your employer or whoever it happens to be. So it's those kind of use cases where actually having the ability to quickly move money in and out of the account, using the data to drive that, and all of the analysis that can sit behind that, I think is where it gets quite interesting and can really open up some good use cases, particularly for banks, like ourselves. We sell a lot of savings accounts that are top-rate savings accounts to people who don't bank with us for their current accounts, because that's the nature of banking in the UK. And it would be great if we could start to then help customers get excess money across in an easy and straightforward fashion, but with careful consent and careful control. And I think that's the other aspect that's really interesting around this, is that we've got the ability to do it right this time. You can give a third party your card number, and you can say, hey, take that money out of my account, and Netflix can put your subscription up by £5. They can send you an email, and off it goes. It comes out of your account, right? Unless you do something about it. The beauty of something like a variable recurring payment is we can do it right. We can say to customers, actually, what do you want your maximum monthly payment to be? You want it to be £15? It's £15. If it's more than that, the bank will block it. So it really we can use it to create a better, more favourable position for consumers if we get the rules right and if we're careful about it.
As I say, the use cases are very wide ranging. I think the competition also extends to some of the infrastructure providers, or some of the card networks, and the direct debits on the banking side. It kind of has the ability to bypass some of those kind of journeys that we follow right now, like you mentioned, on there too. So it's a really interesting space for the whole industry, and I think the other markets will probably be looking closely as to what we do. So I mean, the competition is definitely interesting when we're in that space on the solution side. Numan, Societe Generale have been really active, as you mentioned earlier, in the open banking space, whether you mentioned partnering, acquiring, and building technology, for that. And I saw an article recently that your deputy CEO talked about it really being crucial for the group to adapt and open up your economic models, right? So your business models. Yes. Can you talk a little bit more about what new business models we're going to see from Societe Generale and other financial institutions? Where do you think we're going with this?
It's a huge question. I will try to answer. Globally, the financial sector is currently undergoing a paradigm shift process, okay, which is the result of two things. Firstly, if a new customer demands, which has increasingly focused on personalization financial products and services with low prices and even free, like Amazon, Google, and others. And secondly, it is changes accelerated by globalization itself, with emphasis on the emergence of new technology and new business model based on digitalization, fintech, insurtech, but focused on a niche segment. Banks globally new business model will emerge, in my opinion, from three main strategies. The first one, what we call BaaS, bank as a service, extend banking services by offering an invitation to the business through unified digital channels, throughout API on white label. That's what we are doing on front finance side, for example. The second model for me is banking as platform, which enable third-party fintechs developers to build products and services from bank customers. Banks provide the tools, while third parties create the customer experience. That is first question that you ask, Paul. And the third model for me is bank as marketplace. It's offering a customer a range of products and services from other providers. Regulations such as PSD2, for example, now means that banks should be building open APIs to give other access to their information, to the client information. But they can also use competitors' API and innovate fintech solution needs to create alternatives. On these three models, we can have a great competition between fintechs and incumbent banks, but also, I think, collaboration. That's why we are doing well. But a third way is also to consider that competition, we compete and we collaborate on a range of products and services depending on what the client needs and the maturity of each other. That is a third way for me, which is will be the future of collaboration between banks and fintechs. It's competition.
Competition, yeah, I love that. And I think there's a lot of talk around all the different models that you mentioned. Banking as a service is, probably the hottest topic at the moment. It seems everywhere I look on Twitter and on podcasts, and so it's going to be interesting. I don't think there's any real winning model at the moment, and I think a lot of people trying a lot of different things, and some things will work for others, more than the other models as well. So it'd be interesting to kind of see how that pans out. George, coming on from the different business models, open banking and open finance, should be competitive for not just individual consumers, but probably other segments or segments of those consumers or other segments, of customers too. Which particular segments do you see benefiting from that increased competition in an open environment?
Well, I think Norman has put it all. Okay, so he has put it the models. He has put it the niche approach. So that's what we're talking about. And Chris has put it all the things related to transparency, control in an ecosystem, if you want, based things. So all the things that we can, for now, talk about open finance and open banking, we are talking about. I don't know, in terms of, I would like to go a little bit to what Norman said about the models, because the biggest question of the models is who is doing now this open bank approach in each incumbent bank. I'm talking about the incumbents, so this is who is doing now, because what I see, for example, if you have a technology guy that's doing something, this might turn out to be a platform bank, more. If you go to a guy which is a CFO or something, might be open up to an idea of banking as a service, I don't know who's leading this. So this is a very new area for everybody. And I don't see anyone in terms of strategic and politics and in incumbents trying to put together this and trying to, at first, to state something like a mission or a way. Let's go through this, and we'll go this, and then we can change over there and over there. That's one of the biggest questions I think there are. So what is left to us, And I'm talking about Portugal and kind of banks like ours, Not so huge banks like Société Générale or whatever, I think that we have to work in a concept like platformization. For me, I think it's the way, and trying to with each. It's much like I'm saying this for the first time. It's much like a COVID thing, So we have to put some things together so that they can couple and try to viralize whatever for new clients. So I think that we have to work in niche. We have to be niche oriented, for this this kind of open banking, trying to find the next big thing, okay, so that can viralize a bit to other segments or to other clients, so that they can see this might come in our help. Aside from what Chris put it, that I think it is very, very well put it, but I don't see, in Portugal at least, I don't see too much application of the put a cap on the account so Netflix cannot be. Okay, so that I think would be also a very nice idea. An aggregator, if you want, of Netflixes.
Yeah.
There are 4 or 5 or 6, and the bank in the middle, okay, as I don't know, as a mediator or something, okay. So I think niches, and we have to put in place that banks are still, they do go to market around segments, around products, banking product and service, not so data, okay, not so, okay, doesn't have too much data yet. So, and in this kind of traditional, I think that the model to be implemented for now, for example, is the platform, and the co-opetition, if you want, kind of collaboration with fintechs and others. It's the way to go to a niche situation where you have a specific product or a specific user experience or something that is a bit newer, okay, so that can viralize like some apps, okay, and then one likes and the other likes and then the likes, okay. What is important at the same time that we go to this kind of approach, and we are doing it, and I think a lot of banks are doing the same, okay, because this is somewhat use the old approach with the new kind of idea, okay. What's important here, I think, is banks has to open up the onboarding process, okay, because if you, for us, for example, we have 6-7% of the market, okay, market share in terms of, so we're not very huge bank, okay, in Portugal, imagine, okay. So what we would like is to have a lot of clients, okay. So there are 2 or 3 things that some banks are doing here, which is important. Aside from this niche-oriented new thing, okay, we several banks are doing some new things around onboarding, okay, so that clients can onboard in a bank just like they do in a Snapchat or Facebook, whatever, okay, somewhat like this, okay. This is very important also for banks, okay, because that's a way that banks can, let's say, test and also give us somewhat some social network feel to banking a transaction or banking operation with the client, okay, and that's the onboarding. That's one of the things that we are doing. For example, guys, there are banks using the aggregation, but you only need your VAT number, which is unique, okay, in Portugal, okay, it's unique, and you only need the VAT number, and all the banks has the VAT number, okay, and that can, okay, and they are doing onboard with VAT number. Right. We, for example, are using the centralized, and that is also important, the centralized ID or digital ID that Portugal has put, the government has put in place, which is a certificate, a digital certificate, okay, regarding our ID card, and we are using this to do the onboarding. Okay, so it's very facilitated. You do believe in the government because the government is the centralized data for identification. Okay, and we use it, and this is very important so that you can give niche things, because the bank also, as always, has some friction to onboarding. Okay, and that's one of the things that I think banks are doing also alongside with this niche new offering based on open bank and then collaboration with fintechs. They are open up also the onboarding so that, and this is more like Chris was saying, the bank giving other services with this onboarding thing, okay, giving other services so the client has one service for controlling social network with this bank and has payments with that and has, as no one was said, and has a lending with that, and this all for him is a banking value chain that he has the capability with, just like what he does with Messenger and WhatsApp and Snapchat. You know, this I think will happen. Okay.
I think the other really, I was just going to add quickly, Paul. I think the other really interesting thing with onboarding and opening up of onboarding actually came in one of the consultations we had in the UK around open finance, in terms of, if onboarding was actually available to be done via an API, some of those kind of automatic switching use cases become possible. It's all very well to have a fantastic PFM app that looks at your account and says, actually, you'd be far better off moving your savings account from this thing to this new product. But ultimately, you've got to go and open that new savings account yourself still. You've still got to go through that, as George says, that relatively unpleasant onboarding process. So that's the level of friction. The customer might go, I'll do that later. It's fine. That golden golden use case that the UK regulator sees is you click a button, you say, sort it. And then the new account gets opened, the money gets shifted over, perhaps even the old account gets closed. And the PFM can do all of that via APIs. That's the kind of golden endpoint. But as George says, without a sensible way of transferring ID or transferring risk of AML and lots of stuff we're not going to cover today, it becomes a very difficult proposition, and that's what clearly lots of banks will have responded to.
That's it, Chris. It's a huge blocker for the open finance thing. Okay, so you have to have some kind of onboarding that you have today with Google, with Apple, with whatever. Okay, you have to have it. Okay, of course we're talking about money, so we have to have something more. Okay, and I'm not saying that will be simplified, but I think that's the key point, that everything can explode in terms of openness.
I think also from a personal experience recently, I switched my bank account, and one of the fallouts from that was with one of my aggregation apps that I didn't think of, was that my transaction tagging, that I'd spent a lot of time training the AI from this aggregation app to learn what those transactions meant, and which ones were subscriptions and which ones were regular payments or bill payments. All of that kind of like screwed up, and I had to kind of redo them again because the transaction tagging hadn't carried across when I'd gone to the other bank. So a centralized or a standardization perhaps, or at least moving those transaction tags with the bank account may be something that from a competition perspective we also need to think about as well. I know we've got about less than 10 minutes to go. I think I think one of my final questions really is you guys are all working in banks. If we take competition in an open world, how can banks be major players and compete in that open finance ecosystem we talk about? Let's Chris, let's start with you. And then Numan and George, whether of you can chime in, that'd be great.
I think we've got a partner. I think the only way that we can really compete and stay relevant is by partnering with some of the best people playing in this ecosystem. We've seen that in the UK with partnerships with some of the best PFM apps and their technology that sits behind them in terms of providing customer insight, which, being frank, is still light years ahead of what lots of us in large banks are able to do. So if we're able to partner and bring the best of some of those capabilities to our customers, either within our own banking apps or via more of a marketplace model of partnerships, so that we're still relevant and part of the customer's experience, I think that's got to be the key. And we still got the one advantage we still have is brand. The one advantage we still have is that some customers are still wary of brands they don't know when they're dealing with their financial services. So if we can bring the power of some of the startups and the more mature players in the market, along with our brand and the trust, and obviously with that comes responsibility on our side to make sure that we keep our customers' data safe in those relationships. And I think that's genuinely the only way we'll be able to move forward and remain relevant.
Yeah, no, coming from an incumbent bank to a startup now, Chris, but I really like that answer in terms of partnership. Numan, what's your view?
Yes, I agree totally with
You're on
you,
mute.
Chris. Yes, it's okay. I think that ecosystem have the potential. It's okay? Okay, I said that I totally agree, and I think that ecosystem have the potential to create dynamic financial platforms that are disaggregated yet connected throughout a broader ecosystem of networks, data, information. They have the potential to reshape the sector and create value by a lot of things. We don't have time to explain all, by achieving new customer experience, by innovating financial service products and service model to reframe solution on niche offering, like George said, generating a modulatory and change to a heightened pace, allowing innovation by reality, leveraging from outside of traditional framework by collaboration with fintech, for example, structuring new value chain model with potential to span across financial service sector. That could be something that we have to work on, some new financial platform, I think.
Okay.
Yeah, totally agree. Okay, the question is that's almost a statement. Okay, so yes, that ecosystem will be the way. Don't forget that the banking value chain, I'm talking retail banking, okay, banking value chain has been deconstructed or is about to be deconstructed, okay? And I think that at the same time that we talk about niches, I think bank will also go through a new way of banking, which is niched by. Okay, so it will be a bank special in payments, a bank special in lending. Okay, so I think that is one of the questions that I think will be put. But ecosystem, yes. Value chain deconstruction, yes. But with model, with what model? We've seen what happened to Ant in China. Okay.
Yes,
so,
yes, George. But we have not to choose one model. It will be a mix of a lot of models.
No, I know that. That's okay. It will be whatever. Okay, it doesn't have to be one. Okay. But questions will be put. Okay, and just remember a bit what happened to Ant, and trying to compare Ant with what we chat. Okay, and what kind of banking regulation or banking regulators will want, what model they will want. Okay, a totally free, if you want, model. Okay, which is an orchestrator of companies and banks like Ant. Okay, or more centralized with platform and tiny partnerships, etc., like we chat, which is more likely what we have in so I think questions like this will be open up. Okay, and don't forget that Libra is not Libra anymore, it's Diem. I know the new name for the Facebook coin, for the new Facebook coin is Diem. So they are coming back again. Okay, so they are one of the ones that will try to challenge this open banking thing around again banking.
Yes.
Good. You mentioned WeChat. We're there a lot, and Chris will know where I speak a lot about super apps and SME super apps on Twitter a lot, because I think that there's a lot of competition coming with an aggregation of services as well as products. We're in that space.
Yes.
With Google's announcement, recently, there's other players that are coming into this space.
But Google, it's better yet, okay, because they are putting banks on the back. Okay, with the chart, I think it's I don't know the two banks that are using. What I have read is they are putting banks on the back. You serve me as an account.
Yeah, exactly.
The bank is mine.
Yeah, so okay. We're coming to the end of our session. I want to thank the panel. If there's 3 words that you could sum up in 3 words, I'm going to hold you to this as well. What are the 3 words that the 3 things that you would see driving competition in an open everything world? What do we have to kind of bear in mind? Noman?
3 words only?
Yes, 3 words only. We don't have any time for any more.
I will see competition, open data, and technology.
Okay, open data I'm going to count as 1 word then, right? Okay.
Yes.
What do you think?
Well, for me, I'm with Norman. Okay, it's data. It's automation, machine learning. Okay, that will be, I think, the biggest thing that will help open banking. And I don't see like competition. I'll put it in the other word, co-petition. Okay, so that mainly for incumbents. Okay,
Chris, what's your 3 words? Give it to me straight.
We've all used already, so I'm going to say partnerships. I'm going to merge together genuine value, so things that customers genuinely appreciate and don't just try and think's nice but never carry on with. And I'm going to say too many words there. And existing relationships. So actually, that trusted organisations, trusted bodies that customers use, taking that further.
Okay. Right, great. Thank you very much. None of you can follow instructions, whether we've established that, but a big thank you today to all of today's panel and to everyone that's been watching. This has been such an interesting conversation, and we probably could keep talking for at least another hour. If you want to continue the conversation, I'll be online. I'm not sure about the other panelists, so feel free to connect on the platform throughout the day.
Okay.
Next is a fantastic interactive session, starting with how open finance will take off, led by Yapali. So please head over to the session room for that. And the main stage is going to resume at 12:10 for the Guardians of the Data Galaxy panel, which sounds fantastic. So thanks again to the panel and everyone out there in the FinTech Talents community and beyond. Enjoy the rest of the event.
Paul, thank you. Thank you all.
Thank you very much.